Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of more tariff threats, but markets are over that drama, shoving its impact to the background. If there is news on a US-EU deal, then that will likely change. First in the US though, even though the benchmark 30-year home loan interest rate was little changed, mortgage applications there rose a sharpish 9.3% from the prior week, and that was a rise for a third week in a row, a relatively unusual streak. Both refinance and new home purchases had good gains this week. One reason they may be more active is that Americans are shunning international travel, kind of like in the pandemic emergency, perhaps fearful of the reception they will get in both Europe, South America and Asia. And the feeling is mutual. US-EU airfares are diving and services are being cut back. But Canada is now a hit, with other than the US destinations much more popular. And Toronto especially is getting a surge. In the world of travel, the US is the only major market suffering declines in visitors. And the US Federal Reserve released the minutes of its June 19th meeting, and that hinted at a developing divide among members between those who support the Trump view that the tariff tax impact on inflation will be transitory and those that think it'll be persistent and do long-term and lasting damage to American cost competitiveness. And that divergence affected their view of when to next cut rates. At this meeting at least, those with the fear of embedded inflation won out and rates were left unchanged. But financial markets have priced in two more 25 basis point rate cuts later this year. At least one of their number is in a broader apprentice-style competition for Powell's job, Christopher Waller. And there was another US Treasury bond auction overnight for their 10-year maturity, and it was normally supported. It delivered a median yield of 4.31% compared with 4.38% at the prior equivalent event a month ago. And across the Pacific, Japanese machine tool orders rose in June from May, maintaining their better level in a trend that started in March. And it was demand from domestic manufacturers that was especially strong. Even though in total they were just marginally less than a year ago, that year-ago benchmark was unusually strong for a 2024 month. And the heart of the Northern Hemisphere holiday season is underway, and financial market activity is lighter than usual. This period will likely last until the end of August, culminating in the American Labor Day long weekend. The US Treasury 10-year yield is now at 4.34% and down 8 basis points from yesterday. And we should note that Nvidia has become the first company to command an equity valuation of $4 trillion. And the price of gold will start today at $3,308 an ounce, up a mere $2 from yesterday. And American oil prices are unchanged at $68.50 a barrel, while the international Brent price is just under $70.50 a barrel. And the Kiwi dollar is still just on 60 US cents, essentially unchanged from yesterday. Against the Aussie, we're down 20 basis points at 91.7 Australian cents. Against the euro, we're holding at 51.2 euro cents. That all means our trade-weighted index starts today at just on 67.5 and 10 basis points lower from yesterday. And the Bitcoin price starts today at $109,140 and virtually unchanged from yesterday. Volatility of the past 24 hours has been low, just on plus or minus 0.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.